Hello and welcome to another update video about XRP. XRP continues to be in this larger sideways range so far without any clear confirmation that a substantial low has formed in our support region. Let's talk about the structures here that we are tracking. I'm still tracking a triangle pattern in the white scenario. Let's talk about that. There's been a small adjustment on the micro level, but really only on the micro or nano level. Overall, the triangle is absolutely still intact. If you watch the last videos, then you know that this is the case as long as we are holding above the $1.89 level here, which is here the previous swing low that formed on the 11th of March. The idea is currently that, yeah, this is a sideways range essentially. The problem is we're only moving, we're only moving in the middle of the range for some reason. So volatility isn't great here at the moment. It would be a better trade location, of course, if we were at the lower or the upper end of the range for a long or short trade. This is really just within the range, even though we have some levels for risk management to watch, of course. But in the triangle pattern, we're tracking an unfolding wave 4. This was an A wave down, a B wave up, a C wave down, a D wave up, and an E wave down. This is what I'm tracking. So the D wave, by the way, could still be unfolding. This is sort of in line with what we discussed yesterday as well, where this D wave would look best if it reached if it formed another high and if it reached the blue zone between $2.65 and $2.90, just because these are standard targets for such a structure, within a range, of course. So, I mean, there's nothing impulsive about it. This is all happening in a range. So, structures are very fragile, right? Because there is no trend here. There is no trend. This is just on this time frame that we're looking at right now, on this visible range. This is really just a sideways range. And what we need to see is next a reaction to Fibonacci support. So if we really are in the D wave of the triangle, then it counts best as a W, X, Y structure, and the Y wave is an A, B, C. So I'm watching if the price can react to this Fibonacci support area between $2.29 and $2.39. This is not high likelihood or a highly likely scenario. If we break below $2.29, it becomes more probable that the X wave is still unfolding. To be honest, it will then probably morph back into a large ABC structure, but the local trend is still down. I shared yesterday with you these trend lines here, and they are still holding, okay? So I think it's still worth watching these trend lines. It's like a price channel, like a corrective price channel. So mentioned yesterday to you in the video that once we get a break above the upper boundary line, it could mark the beginning of the next move up. That so far has not yet happened. Might be something to watch for today. But obviously we need a break first as a signal. For now, it's just respecting nicely this trend line on the way down. And we'll see if the price reacts to 235, 229. And then below that, we've got this previous swing low at $2.22 as next support and also invalidation point of this micro pattern. As I said, below that level, then it will probably mean that this correction is still unfolding. This was an overshooting B wave. So eventually then we would morph it back to A wave up. Here, B wave unfolding as an A, B, C, and then we might have another, it might start to rally from down there, for which I will then provide an alternative support area. It's now too early to do that, really. I don't want to make this chart too complex, okay, but you'll hear it on Discord. If you're a gold member, I will provide an update about that later today and in the public video probably tomorrow. So let's check also the other scenario, which is the more directly bullish one, which is a diagonal pattern. Hold on. In the diagonal pattern, we're tracking from the February low a wave 1, a wave 2, and then the third wave is now unfolding. But also here, the third wave would be an A, B, C structure, yeah? And we could break out more directly. Essentially, the situation is very similar, and it will be difficult to identify really the difference between these two scenarios. It will just have an impact on targets. I think I explained that yesterday, that if the larger degree wave 4 already bottomed in February, larger degree targets to the upside are probably a bit more muted, a little bit lower. Whereas if the triangle is unfolding and the wave 4 ends a little higher, because the wave 4 as triangle is still unfolding and will end higher than the February low, should do at least, then targets will be a bit higher, okay? But again, we need a we need to see more price data then, and we need a confirmed low in that wave 4 to really then determine upside targets. But for now, as I mentioned in previous updates, I am tracking the area around $5 to $6 as possible next upside targets. So today, therefore, the focus is on this descending price channel. It's on Fibonacci support and the blue zone between 265 and 290. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, I invite you to join us here on X. For further discussions, you can, if you have any questions, you can let us know here. You can reply to the post and enter the discussion together with other MCO community members. There are additional video updates that you won't find on YouTube. Today there'll be another one, probably about Ondo. So yeah, check it out not to miss anything. You'll find the link to our X profile in the description. Thank you very much,